At this point, one of the things we have to consider is a regime change in the market. Many of our strategies are biased to the long side, and VSD is one of them. Look at these short trades it's taken this year. Look at the short trade today. It had 3 losses before it took the short trade. Yesterday, same thing. Nice short trade this took yesterday, and nice short trade it's taken today. We're not trading the short side right now, but we're looking at it. And if we look at the returns on this strategy since the beginning of the year, it's nearly 40 grand per NQ with slippage and commission, back testing to the beginning of the year, taking short trades. Now, coming into the beginning of the year, it didn't make sense to do that. The short side was not profitable enough to consider, but we have rising interest rates. And we also have guys like Michael Burry. If you're not familiar with Michael Burry, he's from the, if you've seen the movie Big Short, he's the doctor that became a hedge fund trader, betted against the housing market in 2008, made a fortune, went through a 40% drawdown, was mocked and laughed at, and his investors were angry for a long time until the trade finally went his way. He was angry, but he says, right down here, he says, Burry tweeted, people say I did not warn the last time. I did, but no one listened, so I warned this time, and still no one listens. But I have proof I have warned. So, that's Michael Burry. He also has, if you want to follow him on Twitter, a lot of good information about inflation. So we're talking about higher interest rates and inflation, a lot of education on his Twitter about that. He quotes Dying of Money, a book you can download about inflation in the 1920s, early 1920s in Germany. And it's interesting to note all the marks that existed in the world in the summer of 1922 were not worth enough by November 1923 to buy a single newspaper or tram ticket. That was a spectacular part of the collapse, but most of the real loss in money wealth had suffered much earlier. We have rising interest rates. He's making some parallels between what the U.S. is doing and what Germany did in the 1920s, which is not a good sign, because even if you're on the right side of the trade and you make a lot of money, it would be, what will that money actually be worth? And so cryptos also then come into the argument. But let's not assume that we're going to have a worst case scenario that is that bad, because you can't really do anything about. You can't really do anything about it if Armageddon happens. If the dollar collapses that far, there's not a lot you can do about it. So you have to do the best you can while you have dollars. And if you have cryptos, that's good too. But when you're trading dollars in the stock market, this is one thing to consider, is to take more short trades. VSD short, we're going to be implementing that in the portfolio calculator, taking a look at that, turning that on. I'm going to show you what we were trading, and so I'm going to go in and format the strategy, and we were trading it with these settings. It was long only. We turned off the Europe, so we said don't take trades during the European session. Europe hours were set to false. Set those to false. Sell short, made that exit only. And so this is what it was doing. Not bad. 15,715 since right before Christmas. 15,715, 61.55 is the worst case drawdown. So not bad, but recently we're going through this drawdown, which is kind of cyclical. It could reverse and go north. And so we're not taking away the long trades necessarily. We are just going to add the short trades to the mix. And let's look at that again, what that looks like. And this is one strategy that you could just trade this. You could simply just trade this one strategy right now if you wanted to scale your risk, manage your risk better, just trading just one strategy. You're talking about, let's look at a monthly return, 19 in February, 21K in January, and that's what it's doing this year. So this year it's up about 40K, and you would have if you're trading this on the micros, you could risk about $7,300 to $730 to $1,000 per micro, roughly 1/10. Sometimes it's a little bit less than 1/10 because of the extra commission and slippage sometimes in the micros. Some of the trades are sometimes different. So if you trade this, you're risking per micro about $800 per contract to potentially in 2021 up 4K, risking 800. So you also have to look at the longer term risk, and we're going to do that next. We're going to go back and look at the risk over the very long term. Let's go back to 2018. I believe this works back to around mid 2018, and we're going to look at the risk there as well. If you trade this strategy both long and short. So since mid 2018, it doesn't really work that well before mid 2018. We have extra volatility now in the NASDAQ that we didn't have before. And so before 2018 it doesn't work well. And the worst case drawdown was in November and December, about a month here where it did horrible. And so in this case you would risk 28,000, potentially 180,000, and your percentage of profitability is low. If you're trading a micro, you'd risk about 3,000 to potentially make 15 to 18,000, and that is going back almost 3 years. So that would be per micro. You could roughly divide it by 10, and you have a strategy that goes long and short on the NASDAQ. Going to continue to explore more additional short trades for the stock index futures. It's difficult to do in a regime change because when you backtest short trades, they're not that profitable. There's not a lot of short trades that are profitable going back since 2009, but we have to consider what will happen in the future, and we have to consider the balance of taking short trades. It's a good opportunity for us. Rough right now with this volatility. It's hard in general to trade 250 points down, 350 points up. This may roll over to lows once again today. But that's a hard pattern to trade, and getting an early short and sticking with it. Notice that it's still sticking with this trade until the end, or until it's stopped out, or until it reverses to the long side. So I like being able to get in on trades early. We've had some success with this strategy on the long side, and potentially we could see some success on the short side. Short side has been hot lately on the short side, so it may go through a losing streak on the short side right now, potentially, and it may do well on the long side. I don't know what the ebbs and flows are going to be like. If the market's going to, retrace to the upside and then roll over, or if it's going to continue to go down at this point. We shall see what the future holds. Another one is EVP1. It takes long and short trades. It's only day trade. The VSD is overnight. So these two strategies are really like taking on the long and short trades in this market environment.